got to have a sense of what you think your investors and the board is going to be comfortable with, and say, now's the time to take advantage of that. Money's being thrown around. It's because it's cascading down from a lot of these big producers at the moment. Have you had conversations? Have you had approaches from strategic partners? Or, my day in banking, I'd be phoning people like you up and just saying, hey, do you fancy some money? Have you had any of those conversations?
I'll be honest, it used to be a case that we were ringing everyone. Now people are ringing us, which is nice. I don't really want to go out and create like a spurious market, that we're going to just sell it. That's not really our goal here. Obviously, if the price was right, we would certainly look at it. We're here to make money and add value for the shareholders, whatever the best option is for the shareholders at the time. But if you look at Cardinal, it was sat there for ages on 100 million market cap. It wasn't until it was permitted, then everyone started fighting over it.
Yeah, that's true. It'd be interesting to see how that thing plays out. For now. And what are the sort of considerations that the board is discussing each month? What are you evaluating? Because you must be in this market. It's fairly dynamic. Things are changing relatively quickly. There's a lot of M&A. There's a lot of fundraising going on. You must be looking either over your shoulder or slightly jealously at some of the companies out there.
Yeah, no, not so much jealousy. I think for us, it's really about that growth story. If we look at the share price, it's been steadily going up. The volume in the shares is steadily going up. So it's a growing story. We've got a pipeline of projects. At the right price and the right time in the cycle, which is probably not far away. The board will look what can be accelerated and what can't. So obviously we'd like to get into phase 2 probably a little bit earlier. We'd also, for me, probably the exciting thing really long term is the underground, because the underground resources there, are sort of immense. There's about 4.5 million ounces there already, and when you think about that, the replacement cost, the replacement cost of gold now is about $40 an ounce. So, there's a lot of value on those resources. We have pretty good access to, particularly the upper levels in the mine, and they're all relatively shallow. So nothing goes below about 350 meters sort of thing. So it's a very shallow mine, and even the underground. So we have those, and really what we will look at in the coming months. And like I said, the guys are on the ground now in the underground looking at what can and can't be done, so we can come up with a sensible plan to accelerate that process. Get the data, get the results, and let's see where we are.
Okay, obviously, look, clearly the dynamics are going to change between the open pit and the underground. With the grades you've got, you're going to obviously the numbers are going to change. Okay, why?
Yeah, sure.
Of course, right. And the grades aren't particularly high. They're okay. They're not. You're not chasing high grade underground veins. Does that mean the AISC is going to change? Does that mean some of the economics are going to change?
No, actually, underground mining in South Africa is relatively cheap. So when you look at when you say the grades aren't particularly high, I sort of find that a little strange. So beta is about 6 grams. Roofantane's about 8.5 grams. If you look at some of the companies on the ASX now, like Bellevue, they've got 11 grams and they're already capped more than us, and they're a fair way from mining. So I think the grades are perfectly acceptable and high, quite high in parts, and those grades are also diluted. So they're diluted grades from mining. They're not the reef grades. So that's sort of some of the things we'll be looking at in the coming months, see what needs to be done there. We've also, probably with our current geology and exploration models we've developed, we also see potential around the areas that need to be explored and underexplored. Brought in a top tier firm from Australia called CSA, CS Global. There's very good geological consulting company. We're next to the world's largest igneous intrusion, big source of metal and heat, the richest metallogenic province on Earth. And what they really identified for us were the key structures delivering that metal. So there's other opportunities we can look at as well going forward.